Australia's $7.2 trillion residential property market has, of course, been clobbered by the coronavirus, with auction clearance rates falling to historic lows, vendors withdrawing properties from sale and buyers waiting for the downturn in prices. Business reporter Edward Boyd has more.
2020 was shaping up to be a bumper year for the Australian property market. The number of houses for sale grew steadily each weekend throughout January and February, and by March the 1st, more than 3,000 properties were auctioned across the country, returning a clearance rate of 73.9%, the highest clearance rate since August 2019. But then the handbrake was pulled on the market by COVID-19, first with social distancing restrictions, and then on March 25 with the banning of on-site auctions and group property inspections. Property expert Kevin Brogan from CoreLogic says the combined capital city weighted average for auction clearance rates dropped to 30% last weekend, the lowest on record.
I think what's happening is that properties have been listed for auction, and those listings occurred sometime before the extent of the coronavirus situation became apparent. But what's happening now is a lot of those properties are being withdrawn. Over half are actually withdrawn from auction. But it doesn't necessarily mean that they've been withdrawn completely from the market, although some will have been.
Mr Brogan says real estate agents are quickly adapting to the changes and says a majority of sales are now occurring prior to auction. He cites a recent weekend of sales in Melbourne where 89% of the successful auction campaigns were sold before auction rather than at an online auction. At the same time, Mr Brogan says vendors who can hold off on selling their houses will do so until the market improves. This means fewer property listings for auction and a tightening of supply, all at a time when property prices are expected to fall. But does this all spell disaster for property?
A month ago, property prices were expected to fall up to 20% this year, but now it could be as little as 5%.
Helping keep the market afloat is the $130 billion JobKeeper stimulus package, the 6-month moratorium on tenant evictions, and the 6-month bank home loan holiday. The latest modelling from AMP Capital and Commonwealth Bank shows residential property prices could fall between 5 to 10% over the next 6 months. Mr Brogan says once the restrictions are lifted, the market's recovery will be gradual.
If the economy were to reopen in an orderly manner, in a staged manner, you could see the property market pick up again. But it really does depend on, as I say, the sort of duration, and I think there may also be a sort of hangover period as perhaps the more extreme lockdown measures are wound back, where parts of the economy don't necessarily start firing on all cylinders straight away, and there's a gradual recovery. We may see that point in the future having more of an impact on value than the current reduced market activity.
Auctioneer Rob Travato has been selling properties in Sydney for 20 years and says making the switch to virtual auctions has been a challenge.
Well, there's a couple of ways you can have virtual auctions. There's the video conferencing style, or there's the other style where you've got the auctioneer in front of a camera, calling the auction without the crowd, having an assistant with an iPad sort of taking the online bid, so the buyers would actually bid online for those.
He says the heat has come out of the market recently, with stock levels falling and the buyer pool diminishing, which is starting to put downward pressure on prices.
The last 4 weeks have been challenging. There's been some great results. There's been others that have been, a little bit of a struggle because of the interaction levels with the auctioneer reading the crowd, being able to interact with the buyers as well as the agents, normally interacting the way they would normally do on normal auctions, being a challenge for them, trying to get them on the phones. It's been tougher all around.
Philip Horder has been pre-approved for a home loan and is looking to buy an apartment in Sydney's eastern suburbs. He says there is a lack of stock on the market at the moment, and says one of the hardest things to adapt to has been the banning of group property inspections. Inspections can be arranged, but they are now one-on-one with the agent.
It's really handy when you're walking around with other people, just sort of listening to, their conversations they're having with their partner or the agent, and kind of listening to the cues there as to, a few red flags on the property or what's good about the property. And it's always good to get that sort of reinforcement. And it's always good to know what the competition is as well and how much interest there is in the property.
Mr. Horder believes property prices will fall from where they are today and says he's not going to rush into buying a house for the wrong price.
And I'm very mindful of the fact that it's still very early days for us in terms of COVID and what that means for the economy and what the flow-on effect will be. So, I think you'd be mad to, rush in and buy something right at this point in time. I think there is some, there's probably some easing, in house prices to play out.
So the resilience of the Australian property market is being tested by COVID-19. And will the property recovery curve be a V, a U, or an L shape? The key question will be how quickly it can bounce back once the restrictions are lifted and the economy reopens for business. Edward Boyd, Sky News.